One of the really positive developments that we can see at this conference is that we have representatives not just from banks but central banks coming to talk about and learn about community currencies. This is really important because in history, when complementary currencies have thrived in times of economic hardship, the instinct and reaction of the central bank and the government has been to try and suppress them and to ban them, make them illegal, out of fear of losing control over the economy. Now, my argument is that they should look at it completely the other way around. Complementary currencies are really beneficial, not just for the economy, because they can help transactions to get going, they can use spare resources, they can get more production going, particularly in times of economic scarcity. But actually they are far from creating any financial stability. They make the money system itself more stable. And the right sort of regulation to think about for complementary currencies is known as conduct regulation. So this is to make sure that people and companies and groups, community groups that are operating them in a way that is transparent, open and fair for the participants, and that they know that what they're doing, they're not going to muck up people's accounts or sort of cause people any difficulties to engage with the system. They should do that, but unlike banks that require a kind of regulation known as prudential regulation, and this is to make sure that they are safe, I don't think complementary currencies need that kind of regulation, because unlike banks that do fractional reserve banking, they basically create deposits that aren't really backed by anything other than loans that may not be repaid, and they can easily be unstable if they make bad investments or if there's a run on the bank. With complementary currency systems, particularly with mutual credit, you don't run that risk. There is transparency within the system, and everybody is able to see that they can trust other people in the system to repay. If there are defaults, then it's mutually insured. So there isn't money being created out of nothing. Money is only being created because people are actually doing transactions with each other. We do, of course, as I say, have to make sure that people with bad intentions are prevented from running currency schemes. And one of the reasons I am suspicious of schemes like Bitcoin is that there is no transparency over the governance. I can't see how the money has been created. I can't see how decisions are being taken about how to run it. And I don't like that kind of scheme. I think that we should favour currencies that are run in an open and transparent manner. There are many complementary currency schemes that have set up and operated for a while and then they've stopped running. Now, some people look at that as being a sign of failure with the movement or even with the concept. But we need to be quite careful there, because although it's true that some schemes have not been successful for various reasons that we can learn about and we can help future social entrepreneurs be successful, one of the reasons why schemes stop is that they've met the need that they were set up to address. What is unusual about complementary currencies is that they have an objective. There's a need that isn't being fulfilled by the normal financial system, or indeed the normal, you might say, system of social provision. There are unmet social and economic needs, and a currency can help fill them. Now, sometimes, if it does its job really successfully, we don't need it anymore. So the disappearance of a currency can be a sign of success. I'm very enthusiastic about the potential of community currencies. But it's always important to be careful to not think that making one change, however significant, can solve all the world's problems. And sometimes people in their enthusiasm and passion for complementary currencies sound as though they're saying that it is the solution to all our problems. It isn't the solution to all our problems. But I do think, particularly given what digital technology now enables us to do, that complementary and community currencies can really help transform our social and economic systems in ways that make them produce higher human well-being and also stay within the planet's ecological limits.